Call to order the pension board. I'll get my computer working.
I'll make a motion to approve the minutes.
Second.
That motion and second. All in favor?
Aye.
Yes.
Any opposed? All right. We have someone from Pinnacle that would like to make a presentation? We move quickly in the pension board.
I think you guys should have a copy of the presentation we brought. We took a snapshot of year-end for you, and I thought we would address the performance and all the measurement through December 31st, and when we get to the end, we'll talk a little bit about what's happening now and what we could look forward to in the market and our expectations here. So if you've got the presentation that I provided, as I mentioned, we did this through December 31st. We tried to put some page numbers in here for you. But if you take a look at page 3, you can see basically we began the year with a market value of $23,764,267. We brought in about $1.2 million as far as contributions. If you move down that right column, you can see our benefit payments were $1,187,000. So we took in contributions about what was paid out. We've itemized the fee, realized gain and loss, but basically we wrapped up the year at $28,146,485. So from the beginning of the year to the end of the year, we saw appreciation to the tune of about $4.4 million in calendar year 2019. So all of these numbers are just taken from the statement, so I'm sure you can see them in the statement. This is just a little bit more concise for you. If you flip the page, you'll see a snapshot of what the portfolio looked like as of December 31st. Again, just a different format than what you see on your statement. But the biggest thing here is we had about 3.5% in cash or money market. We had 55% in equities and 41% in bonds or fixed income. Towards the back of the presentation, I've included the guidelines or parameters from your most recent new IPS from last February. So I put that in there just to kind of remind us what we're operating under as far as where we need to be from an allocation perspective. A quick year-end, $28,044,000. Yesterday's close, $27,568,000. So a difference of about $475,000 from where we ended the year to where we closed market value yesterday, down about 1.7% since the end of the year. So last two days really volatile. I just wanted to kind of quantify that for you, about 1.5% different. So this is just a snapshot of the overall allocation. It speaks to the quality of the bonds in the portfolio, the length of the maturity in the bonds in the portfolio, and we've got a little bit deeper dive into the fixed income side of things a little later in the presentation. But we're always reinvesting the proceeds of those bonds as they mature. We've got maturities, several maturities every single calendar year. Right now we have about $585,000 in money market, so we have invested some of that cash that you see at year end into fixed income between year end and now. So this is just a list. The next few pages is just a list of the holdings that we have in the portfolio. When you instated the new investment policy statement and we moved away from the DFA funds and implemented the new strategies, we did that basically in March, April, a little bit of May last year. So not a full calendar year with the allocation that we're currently in. So that took a little work, first quarter of last year, but by May we were completely invested the way we wanted things to be going forward. If you look at page 14, we'll take a look at how the bonds or the fixed income performed in the portfolio. The year-to-date number was 698, or just shy of 7%. We haven't seen that in a long time. Not in short to intermediate term, good quality, investment grade, corporate debt. There's a couple brokered CDs in there. Occasionally there might be a short treasury in there. So 7% on a fixed income number was a pretty strong year. If you move left, you'll see you're running off at an annualized number of about 344 and a 5-year number of about 289. So rates came down, and they've really jumped down in the last week or so. So we've got a 10-year treasury that's in the 130s, historic lows in the fixed income market. So it's going to be a challenge as things come due to replace those bonds with anything attractive. And that's our challenge, trying to find the right space where we can pick up a little bit of yield for the portfolio. But we came off 2019 with just under 7% on the fixed income side of things. If you flip over to page 15, you'll see that we're from an equity diversification standpoint, we're at about 20% in international and 80% in domestic. So we've come down the international scale since a year ago. We were 24, 25% last year, and we've come down that as we've reallocated these dollars. The equity performance is on page 16. So the one-year number or the year-to-date number for the equity component of the portfolio was 30.78%. So that included the individual stocks that we manage, the exchange-traded funds that we might use in the mid or small cap space, the international funds, all of them rolled up together, just shy of 31%. So you can see the S&P 500 did 31.5. The international markets did 22. So the international markets continue to be a drag relative to domestic stocks. Just for your frame of reference, the individual stock strategy that we implemented for 2019 returned 33.27%. So we saw 200 basis points, 2% better than the S&P 500 with the individual stocks that we chose to put in this particular portfolio. So 30.78 for 2019, a 3-year annualized number at 11.28, and then a 5-year number at 9. And the S&P 500 and the MSCI that you see below that, those are just indices relative, just to give some perspective to the portfolio. The MSCI EFA represents the international component, and then of course the S&P 500 is a very recognizable benchmark for folks. The next slide got a little out of order for us, so we're going to step back to the fixed income, the bonds in the portfolio, but this just gives us a summary of how things are allocated. On December 31st, 2019, our average coupon or interest rate on the bonds was 3.33%, and our average maturity was 3.76 years. So pretty darn short. I think if you move across the page, you'll see that we tend to stay in that space. We're a pretty conservative fixed income manager. We had about $11 million allocated towards bonds at calendar year end. The pie chart on the left at the bottom just tells you from an allocation or from a quality perspective where we are. So this is a little different than last time. We've got a few more in the AA, single A space. Where we've been able to find yield now has been more in the BBB space. That's where you're able to pick up some yield. The not rated and the other would be certificates of deposit, so that's what's captured in that space. And then you can see the actual term or maturity to the right. 35% is in the 5 to 10 year. Short 1 to 5 is 50%. So you can see we're staying pretty short there. Page 18 is the entire account as far as performance goes, and I know that you guys use a 7% assumption in the work that you do here. For 2019, the overall account returned 18.4%. The 3-year number is running in at 6.99, so right at that 7% number that you've used in your assumptions, and then the 5-year number is at 5.5, so a little shy. So you can see we really pulled out, and I think the decision to move away from the funds we were using and the strategy we're using for 2019 and then looking forward is a wise decision. I think it'll show you more potential upside, but more importantly, a little more protection on the downside, so a less risky type portfolio moving forward. So 18.4 for calendar year 2019. I wish I could tell you that 2020 is going to be that, but 2020, there are a lot of positives out there, but then there's also a lot of noise and a lot of things that we can't control in the marketplace. So I've included, page 19 is just the parameters that I'm operating under as far as where I need to be from stocks, bonds, international, small, mid, and that's kind of where I live within that space to be compliant with your investment policy statement. I've included in the bound presentation an overview. It says core equity strategy. That's the individual stock strategy that we're using, and this is just kind of a recap of what happened in 2019. What did we do? Who were the winners? Who were the losers? What sectors really contributed to the performance for us? So 2 big things. We were under in financials and over in utilities in 2019. That helped us. If anybody keeps up with the market or individual names, our big winners or top 5 contributing names in the portfolio were Apple, Microsoft, Visa, Danaher, and American Tower. Our bottom 5 contributors, not saying they were negative, but lowest contributors to the portfolio, were mostly energy: Exxon, International Paper, Emerson, Chevron, and Verizon. The things that we did in the portfolio, or the changes that we made to the portfolio: we removed Capital One, we removed Deere, we trimmed Nike and HCA, we moved out of Netflix I think it was in December, and most of those moves have to do with earnings, free cash flow, just what we feel like the outlook is going forward. So that's a recap of the portfolio. The next page is just a recap of the strategy as a whole that we were using, because that's the single largest strategy that we're using in the portfolio outside of the bonds. So the piece that you find in a paperclip is a piece that hit my inbox this morning. I think it's a really helpful piece. It's a partner that we use, FCI, and one of the things that I had never seen before was one of the comments that they made is stocks, there's a lot of volatility in the market. It's all about, right now, or the last couple of days, it's all about the coronavirus. But it's kind of keeping your perspective and knowing what your allocation is and what your objectives are long term. So one of the comments they made here is that stocks tend to take the escalator up and the elevator down. So I'd never heard that before. That's true. We highlighted a couple pieces or a couple paragraphs that we thought were good to help keep things in perspective. One is that corrections are needed to remind us that stocks have risk. In the short term, that allows for gains and opportunities for us to redeploy some of those dollars. The bottom line is the market's been on an unbelievable run. And even since October, the trajectory has just been something that we hadn't seen in a long time. But what we're seeing now is really normal. And this is the most critical piece here. It says, it is a needed reminder that equity investing entails risk, and that this risk can be best mitigated with a thoughtful allocation to other asset classes that complement stocks, particularly high-quality bonds. That's exactly what we're doing. That's exactly what's happening. That's how this particular portfolio is poised to move forward. So this is short-term, kind of the volatility that we see in the marketplace. There will continue to be volatility in the marketplace. We're in the individual stock portfolio, we are looking for opportunities and have made changes to become a little more defensive, to hold up better in those more turbulent markets. So we are monitoring those on a daily basis, making those changes, but at a 55% overall allocation to equities in a pension, I think that's an appropriate place to be. The last piece I put talks about, or helps kind of frame our perspective looking forward. Okay, we've come off a 30% equity number, in the S&P 500. What's going to happen going forward? And for the most part, it takes a look at 1970. Stocks have been up almost 11%. The Treasury was 6.8. 1990, up about 10%. A Treasury of 6. Pretty much capital market assumptions looking forward are assuming about a 5 or 6% equity allocation. So that's a far cry from the 30 that we just came off of. So it's just an opportunity to frame what we can expect going forward. And this has got a U.S. 10-year at 2. It's 136 today, and now there's a 50% chance that there's going to be a rate cut in the markets later this year. So all that to say is we're positive, but it's definitely going to be muted. Earnings are looking nice in the names that we own, but it certainly won't be what we experienced last year. So, anybody have any questions? Just blew through that. No?
Thank you.
Well, thank you. We appreciate your business. Thank you for your time. Thank you, Lori.
Any other discussion? Make a motion.
Make a motion, we...
Motion to adjourn pension board.
Second.
All in favor?
Aye.
All you.
Now call the MED Power Board meeting to order. Entertain a motion to approve last month's minutes.
So moved. Second.
All in favor?
Aye.
All opposed? Minutes. Lori, financial time.
All right. Starting with the comparative balance sheet for January 2020 to 2019. There weren't very many changes. The main ones were in the deferred debits. Other deferred debits was an increase of about $716,000, which is due to the recording of our inflows for outflows of resources for our pension. And then the same is true for the other deferred credits. The decrease is for the inflows of resources for the pension for $741,000. The other thing that's major difference is our accounts payable, the decrease of about $4 million, where we're prepaying TVA for our purchase power. The total assets as of January 2020 was $229.6 million, just a little less than $230 million. Moving to the comparative revenue and expense statement for the month in the comparison of January. One major increase was in the operating revenue, rent from electric property. We recorded the pole attachment invoice for Comcast in January, and that was an increase from $63,000. The rate went from $10.41 to $19 per pole attachment for them, and they have about 8,000 attachments on our poles. So that's...
Are they paying that now? That increase?
Mm-hmm. We billed it. We have billed that, but that was in the agreement for them. And looking at the operating expenses under the customer accounts expense, and then also under the maintenance expense, the administrative and general, both of those are increased due to we did not receive our NISC, which is our software vendor invoice, in January of 2019. So this January 2020 is really a true expenses, what they should have been. And then under income, other income, which is our interest income that we're receiving on our accounts. And we received notice from First Horizon in November 2019 that our interest rate for our savings account would go from 2.05% to 1.1%. And so that is a decrease of that cut that income from about $82,000 to $40,000 in monthly interest income. Other than that, everything was pretty normal. We had for the month of January of income of $580,000, and then for the 7 months for fiscal year 2020, we had a net income of $3.6 million. Moving to the statistical data report.
Lori, wait just a minute.
Ma'am.
On that one, where the interest rate went down, did you have a chance to, could you have moved that at that time to something else?
I don't know that we, at this time, I haven't looked at anything, but I think most of the rates have decreased. And I'm not sure that we're going to be, at this point in the merger talks to tie up that money in something that might be able to yield something higher.
And we've seen similar decline in our prepay rate as well, that we prepay TVA. It's dropped.
I wouldn't be in the position to really move it right now, but I'd let them know that I will pay you 1.5% on that money today.
Okay. I will be sure to reach out to them and let them, and could I hear that rate again?
1.5.
Okay.
I might go higher, but I'll commit to 1.5.
Okay, I will reach out to them and
You can play with that.
Who would else like to bid on that rate?
Pinnacle, come on now.
It's like when I tried to buy that property back behind Station 4. I'll pay more than that.
But anyway, but I will,
Craig, did you have a bid?
I don't think we need to move it.
I think, hey, look,
That rate's low.
since I'm not on the bank side, I'll say this to you. I think the idea is here that it's probably worth a phone call to them to say, look, we understand rates are going lower.
Yeah.
But other banks are offering money market rates. Don't have to tie it up in a CD.
his email to me that I received was that they were, the 1 year in November of 2018, the 1 year treasury was 2.67.
Yeah, we know all that.
And all that.
We know all
Okay.
that, but the reality is,
But
other banks out there
Okay.
will pay probably more like 1.5 is the
Okay.
idea, and so,
Without
And if-
getting in the weeds, is that Craig Bechtel?
no.
Banker.
Yes, Craig Bechtel.
Tell Craig that I said I'd pay $150 on that money.
Okay. All right. Do you? Okay, do I need a motion or?
No.
Just
Just
okay.
respond to Craig and say, we discussed it at the board, and Richard Stone said he'd pay us 1.50 on that money today.
Okay, I will do that. I will leave here and call him.
If they won't, here's what I think we probably ought to discuss, is if they won't increase the rate to 1.5 to kind of be an in-between where they were and where they are, we probably ought to have a game plan from the board's perspective of whether or not we're prepared to go ahead and move that account. I mean, it may be, it may be more trouble than it's worth, for 40 basis points for a few months or whatever, but it's certainly going to be some money, so
Okay.
if,
I will reach out to him and then I will send y'all an email and once I receive a response from him.
can we vote on something like that, Adam? Via like a special called vote or proxy or something instead of having to wait till the next meeting? Because, by that time it would be,
If it is.
or should we make a motion now that if they don't increase it, that we would authorize them to go shop it?
Yeah.
I mean, I think
That's what
you
I
could
was
do-
thinking.
Yeah, you could do that where you were granting staff the authorization.
Yeah.
If this contingency arises, staff is authorized to.
Do you guys want to do that? I just,
How much money's there?
43 million?
yes.
Oh, yeah.
Yeah, that's more, yeah.
They should only manage.
That would be,
That's $14,000 a month of it at 0.4%. That's $14,000 a month more. So I'll make a motion that if they don't increase the rate back to 1.5, that we authorize staff to go out and try to achieve that rate
Okay.
elsewhere.
I'll second that.
Second.
Or Irene?
All in favor?
Aye.
All opposed?
Thank you, Miss Irene, I will do that. All right, moving to the statistical data. As of the end of January 2020, we had 60,250 customers, which was an increase of just a little less than 3.5% from a year ago. And then also in your packet, I did include a letter that we sent to the Tennessee Municipal Bond Fund notifying them of our intent to repay the outstanding balance of our loan, which was in the amount of $3,417,000. And they will, are sending out with the information that they need to bondholders regarding that. Also, I have sent an email to the Bank of New York Mellon Trust for the bonds. We have about $750,000 with them, and that bond resolution allows for us to have full redemption of those bonds anytime after June 1st, 2019. So in case the merger is successful, we will be able to pay those bonds off before the sale is complete. So that was just for information only in there for you. Moving on to disbursements in the ACH transfers, the total amount for January 2020 was $13,074,788.42. One disbursement that was included in over the $10,000 report was where we purchased the outerwear for the cruise, which was around about $15,000. That was not a reoccurring monthly fee that we did pay this month. For the uncollectibles for the month of January, we had 94 accounts that were deemed uncollectible for a total of $7,509.90. There were only 2 accounts that were over $300. Both these accounts were good paying customers with no deposits, just they didn't pay their final bill. And for the bad debt analysis report, our total bad debt net expense for the year is $47,958.41, or 0.0451% of sales. Any questions? And I will send an email as soon as I hear from Craig and let you know what we will be doing as far as looking at investing the money. Thank you.
Thank you, Laura. I see that the safety report has nothing on it, which, how many months in a row now is that?
Good, very good.
13, 14?
November 29th of 18, so 15 months now.
Congratulations.
Yeah, we're excited that to achieve the 1 year, and we're even more excited that we're carrying it forward, and hopefully we can make 2 years. Guys do a really good job, and it truly is safety first. I mean, they take it very seriously.
We'll move on to material purchases.
Material purchased under $25,000 this month was $302,012.80. We had one purchase between $25 and $50, some vacuum switches for $43,272, and no transformers purchased this month under the blanket, which is really surprising. Fuel cost for March is right around 1.6 cents per kilowatt hour, and that's about 15% lower than the 3-year March average, and just primarily due to lower purchase power and gas rates. And if you look at the bar chart there, they're projecting that trend to continue on out for the next 12 months. So we've seen extremely good fuel rates. Of course, the hydro production has been extremely good. We sometimes wish that would stop a little bit and we'd have some sunshine, but had a lot of rain this year. And so we're generating a lot of hydro power, but I know our customers are appreciative of that lower fuel costs on these winter bills, so it helps out a lot. Okay.
Never would have thought of that.
I'll move on into my report. We had a wreck on the 300 block of Southeast Broad back on February the 1st, which took out a 284 out of primary, and we had about 450 customers without power for about an hour, and then 48 customers for about 3 hours till we got that fixed. And then on February 12th, we had a circuit at Pitts Lane experienced a lockout due to lightning strike at 6:10 p.m. and the lightning strike caused an arrestor to blow, which was the cause of the outage, and it lasted for about 55 minutes and affected around 2,600 customers. The TVA STEM classroom grant program is designed to fund STEM learning projects in classrooms and schools in the TVA service area. And Murfreesboro, fortunately, this year had 4 winners, and TVA presented checks of $5,000 to Irma Siegel and Hobgood, $3,500 to Salem Elementary and $2,500 to the Discovery School. So that was proud to get those grants. And I think I handed out a letter from Salem, one of the teachers at the Salem School that responded how much they appreciated that. We were recognized by the APPA for our assistance that we provided to Clarksville during their storm back in the fall when they had the high straight line winds. So we got some recognition from them for that. Last thing I want to do is kind of bring you up to date a little bit on our TVA talks. I handed out a copy of a distribution that went out this morning to our employees and Middle's employees from Chris and I. We've started a transition team, leadership team meetings, and we're trying to meet every couple of weeks. And the last meeting was last Friday, and just providing an update to that meeting. And currently we're focusing a lot on the transition of our employees, make sure they're appropriately taken care of and benefits are secured. Friday's meeting had a lot of discussion about benefits. Also working to bring our two NISC systems together, and we've set up a core group to see that project through. Employees from Mercersburg, employees from Middle. A number of other group meetings have begun, accounting, purchasing, operations. So we're starting to meet quite a bit to kind of plan the transition if TVA gives us a go-ahead on this. But we've made a lot of headway, still a lot of work to do. Just wanted to share that with you. And we met last Tuesday with TVA, regulatory folks. They requested the meeting and just provided feedback from what we'd submitted the proposal to them in mid-January, and they kind of had a bunch of different eyes look at it at TVA from different parts, and they combined all their responses and questions, and they came back and presented us a list of about 62 questions. At first it sounded like a lot, but I think this is all their questions. I don't think they're coming back with any more. This is everything they've got. And that response went to TVA yesterday to respond to these 62 questions. They kind of broke it down into factors, overall long-term well-being of the LPC and its ratepayers, financial terms and allocation of proceeds, synergies and cost savings, rates and rate parity, how we're going to bring our rates together over a period of time, financial integrity and strength of the LPC, operational and reliability impacts, existing programs like community programs, things we do within our community, and other benefits and risks. So response to those questions went out yesterday to TVA, and we've agreed to bi-weekly calls to get a regulatory process update. So it's a collaborative process, and there's a lot of communication going on, which we're very pleased with. So I thought we had a good meeting last week, and I really believe that this is everything they're going to ask of us. I don't think they're going to come back and ask more. Craig was there. Do you feel, is that kind of the take you got?
You probably have a better read at TVA than I do, but I think so. It should be. I can't imagine. Some of them were rather detailed, more than you'd ever think they'd spend time on. But
it's funny though. Some were very detailed, and some were kind of in minutia. I thought,
Well, some were silly.
Yeah, and shouldn't have been there.
The regulators.
But anyway, I felt like they showed their hand. They showed us, I think this is everything that they wanted to see. So I feel pretty good. I think the responses were good.
That's the important thing. I think the responses were really solid. So there was no question out there that we couldn't respond to in a very rational fashion.
Are the questions addressed to us and separately to Middle Tennessee, or is it a joint effort? They send the questions the same to both and we respond together?
It was a joint effort.
Okay. Yeah, it was joint. Yeah.
If I can just add, yesterday I also submitted a letter to TVA's legal counsel, both inside and outside legal counsel, addressing various questions that TVA had regarding the city's ability to sell its utility, electric utility, the process that the city followed, and the structuring of the deal, both on issues of the, primarily with respect to the installment payment structure, terms of the deal, and the what the city can, legally use the proceeds from the sale for. I'm happy to share that with you if you want to look at it. It'll be a public record. It's 14 pages, so if,
14 pages of legal analysis.
It's the legal analysis, but if anyone wants to see it, I'm more than happy to share it with the board. Yep, I'll just send it out to the board then.
Yeah, no, it's good. And, not all these questions we are confident weren't self-generated by TVA. I think they're, and some were, I'll say, inconsistent with what TVA has done in the past as far as the implications the question would rise. But I think they're covering off everything that people are throwing out there to get answered. And I think, again, it was comprehensive. There's answers for everything, and I think it was a strong response.
Is there additional state involvement, or have they opined to the extent that they will?
There's no state involvement.
Yeah, I think I have not seen any formal response, but my understanding is that the Attorney General was going to decline the request for an opinion and not issue an opinion saying that this was a local matter and that they weren't going to get involved.
It started to become pretty clear he was not going to opine on it, and I think the request was made, can you provide a letter saying that you're not going to, instead of just letting it sit on your desk. So I think that's coming. I don't think we have it yet, though. I haven't seen it.
I haven't seen anything, and he's not obligated to do it. So,
no, but
it'd be helpful, but
it seemed like Brant said he was willing to do it, or we thought it was coming, but I'm not
good.
sure.
Okay.
And we feel like that would help put that to rest with TVA in terms of the referendum question. Any other questions about the merger process, where we're at?
Can you tell me, and of course I keep getting this from people at church and whenever I run into someone, what is the difference in the residential customer rate and what MED charge and what Middle Tennessee charge?
Ms. Howard, they're very similar. They're just packaged a little bit different. Middle has a higher customer charge than we do, flat charge, and then their energy is a little cheaper than ours. Our customer charge is a little lower and our energy is a little higher. Now, we took a step toward, TVA added a fixed cost component to their wholesale rate last fall, and we took a $2.50 increase in our customer charge. So we're about $7.50 less than Middle on the customer charge because of the way TVA is focusing on the wholesale side, and with distributed energy issues coming forward, there's an emphasis to put more emphasis on the fixed charges. So I think we would continue to see that fixed charge going up. So, but overall, I mean, a large user would see less, their bill would be less with Middle than here. If you're a very low user, it's going to affect you maybe a little bit if, because their customer charge is higher, but they're very, very close, within just a % or two of each other. If you draw lines out, they're almost inseparable.
The same.
But very minimal impact, and as part of the rate parity, we have to present a plan that we're going to bring those rates together over a period of time, and how that's going to be done primarily, I think, would be to keep stepping that customer charge up for our customers and lowering that energy charge. It would be a revenue neutral thing overall, but it would get us, and eventually I think it's a 4-step process. Now I don't know if those steps are going to be 4 years or 4 steps, but but to bring our rates together so that we're all paying the same rates, but they will continue to be different. And day one, our customers will see no difference. They'll be paying exactly what they're paying now, and middle will be paying exactly what they're paying.
Good, okay. That's good. Thank you.
Anything else?
Nope.
That's all I've got.
Ms. Gina?
Good morning.
Morning.
In your packet of information, we do not have any changes this month on any of our positions or salary requests, but I did want to follow back up. I know last month, Mr. LaLance asked us to go back and look at our positions just to make sure that we were not putting ourselves in a bind or not fulfilling the job orders and running as smoothly as we can. We circled back around and had a meeting with PD. And looking at this, you may notice at the bottom, we have 7 positions that are still on hold that actually had people in those that were not new positions. And one of those was a customer service representative. That position was on hold even before we started the talks on the merger. We have discussed, if this continues to be prolonged, we may need to go ahead and fill that. The other positions, most of them are in IT. And since we hired Ryan, he has helped tremendously in that department. And we have excellent consultants. So we talked to John, Florida, and he said he thought we were fine in that area, keeping those on hold. Another position in operations for the operations engineer manager. I know Jackie's working even harder, and he has pulled Chris Barnes, our senior engineer, team a lot to work with him in that area. So I think they're trying to cover most of that. And the last position was a truck driver position from where we promoted someone, and we're using the apprentices to fill in that role, which is good experience for them as well. So we came to the conclusion that at this point, we're okay. I think employees are working really hard. They're very dedicated. So I think right now we're going to be okay. So, but thank you for checking, because if we see that it gets, too much on any one person, we will definitely look at filling those needs. Any questions?
Yeah, I was just going to add to it that, now that we're beyond the council vote stage of this and waiting on TVA, obviously it's not a done deal till that happens. But since we're past the council vote, any of those things, my anticipation was if anything did come up where there was a position that you guys just thought, we really need to get this one filled, that at this point you could at least go talk to Middle Tennessee and say, okay, we know this is coming. Does this match up to what we want? And so if that comes up, my suggestion would be, I think everybody should be on the same team to work together with them, make sure this is something we can go ahead and knock out, okay? So that was sort of why I brought it up back then, because I thought if we were to this point now, we could go ahead and do it. Or if the council didn't vote, we'd be ready to rock and roll now, right, to get them filled. So anyway, thanks for going back and looking at that. Appreciate it.
And
thanks for all the hard work.
We did talk with Middle. We talked with their HR director, Gray Bateman, and he basically said, you need to leave that up to PD and your team to determine what your needs are right now. And they have offered us assistance from any of their teams if we were to need something that they could help with, which is very nice.
Very nice, yeah.
But, so we are communicating with them about these things, but just trying to keep things stable during these talks and not trying to make a lot of changes on numbers or things like that. So that's kind of where we are with that.
Well, we're thankful for all the hard work everybody's putting in.
They are. Thank you.
Thank you, Gina. Philip, city projects.
I left one thing out a while ago. It's just very minor. I'd handed this out this morning. TVA donated $10,000 on our behalf toward the local United Way on ours and Middle's behalf. So the combined campaigns, and TVA's contribution was just slightly under $60,000. So we presented that check the other day to them. It's about the fourth or fifth year that TVA's done that, and we certainly appreciate their interest in our local community.
Morning, Mr. Chairman, member of board, Mr. General Manager. Pleasure to stand before you all again. I have, when I say the word you all, somebody laughed at me the other day. She sounded really country. I said, I'm from the country, just different country. And I thought there's a sense of humor there. So, but there's 6 items on there. I think a couple of things on the city project that I might want to take note. Fire Station 11 called on Brace Drive is complete. So within the last few months, we actually completed 2 fire stations, Fire Station 4 and now Fire Station 11. Now, I don't know how big the logo is going to be in Fire Station 11, but number 4 is really big, so we'll see. So I know, Rick, you're laughing at me because I told you that. So. And tomorrow, at the airport terminal, the work is progressing very well, and MTSU has a share in that terminal. So Andrew Ottman, which is where MTSU spokesperson, has requested for a tour, a hot head tour. Means you're going to walk through the construction site. I think they came out with some ideas about perhaps they want to light the place differently with some true blue lighting. So we'll see. The reason why MED is invited to come for the tour is because we're involved in the construction. So one of my engineers, Josh, saying will come with me and we'll tour. It's organized by Chet from the airport. So. And it's from 11 to 12 o'clock, so I guess if you can come, if you want to come, I will let him know that if you want a tour. But we'll bring you a hot head, make sure that, because you're still under construction. I know, Craig, you're going to be there. You invited, right?
Depends on the weather.
It depends on the weather, okay. Well, I was going to wear my raincoat to walk here to the meeting this morning, but it's too bright, too yellow. But, So that's the 11th project we have, and then also you're going to start to see some movement going on a Rocker Lane project. The city this quarter is going to lay it out. And matter of fact, we got a scheduled meeting coming out with Middle Tennessee because, as you know, we're going to be actually combining. This will be the very first project to see the 2 circuits coming to 1 circuit on one side of the road. That we will take over 380 homes. So the city is going to let the contract out. It's just a matter of a few more weeks from now. So we got people knocking at our doors right now asking when is the scheduled date, because some contractors are interested in that job. So I think it's going to be a beautiful project, and we're looking forward for that because it helps a little bit fulfill what we have done for Veteran Parkway substation, kind of pick up some capacity, and when it clean up, it's going to be really nice. So I'm anticipating for the project to go really smoothly and well. So. That's pretty much got on the city project. Unless you got any other question, I'd be glad to answer. As always, thank you for your support.
Thank you, Philip.
All right, thank you.
Fiber?
Okay, Mr. Chris Bond is on assignment, so it will be me, so bear with me. I will not speak like him, but I'll try. So, the city project's progressing really well. According to his notes he gave to me, you have the dashboard presented to you, our 33 building. We have 18 buildings, 100% complete, the work. Progressing really well, even with all this wet weather, the crew is able to do the contractors able to do a lot of work. And I think the more project were picked up in the month of March. Hopefully the weather dried up a little bit. We're still within our estimated range of the estimate we gave to the city, between 640 to 750,000. So I think we're within that. So we're pretty pleased with the progress been going on. If you got any question, I'll be glad to try to answer. If not, I will find out from Chris and bring it back to you guys.
So do you have a projected completion date? I know weather plays a factor, but you got a ballpark?
Well, I think based on what I talked to Chris, we'd like to get this thing all wrapped up by May, if we can. Hopefully before the merger actually happen. So.
Okay. Thank you.
Thank you. Yeah, have a good day.
You too, Tim. Church Street Substation Labor Material Bid Evaluation. Okay.
Good morning. We, a couple of months ago, we brought the some of the material bids back to you, and y'all approved it to buy the breakers for the Church Street substation maintenance replacement. And this is for the labor. This will install the breakers and replace the electrical panel and put in a DC panel and put oil containment around the transformers with a water oil separator system. And this will be the last sub that we have that doesn't have this. And we had three bids from 3 contractors that we've used before, and the low bid was with Groves Construction for a price of $321,160, and we'd like the board to approve that so we can finish up this project and have all of our substations in great shape.
So moved.
Second.
All in favor?
Aye.
All opposed?
Thank you all, and we appreciate your service to the board, and it's probably the last time I get to come up here and say that, so thank you.
Thank you, Jackie.
Thank you. Is there anything else to come before the board? I entertain a motion to adjourn.
So move.
All in favor?
Aye.
All opposed? Meeting is adjourned.